Good evening, everyone. Let me turn that music down. Let me know if the music gets too loud. Are we gonna get the epic squeeze this week? Oh. Yes, gang. All these get posted after, so might take a second of processing, but usually they go up almost immediately after I get done, so you can watch it tomorrow if you want. Probably do about an hour's worth of charting and squeeze talk tonight. We'll go over what makes a good squeeze. We'll go through the data. We'll crunch the numbers. We'll chart some stuff. We'll see if we can make some money this week. I got a little R&R, so I am pumped to do live tonight. I am excited. I hope you guys are all excited. I love a good squeeze. It is what makes the stock market fun. In my opinion, it is the best time in the stock market is when you catch a good squeeze and you're on the right side of it. I'm just fucking with you, Scanna. You gotta do you. I'm here if you need us. I sound dark. It's the music. It makes me sound darker. Golden State in 5. Everyone must be doing stuff. No one wants to make money this week. That's alright. We'll keep all the secrets to us. Alright, futures look good. Let's plot some levels while we wait for some peeps. It's clear that futures are bouncing off this level right here. Workhorse, I haven't looked at Workhorse in literally a year. Let me see what Workhorse is at. Oh man, what is that? Oh my goodness, what a stock. Alright, let me check what Workhorse is shorted at now. Is that even shorted anymore, or did the shorts win and no one got to squeeze them? 23%. Wait, hold on. Oh, I don't like this. Workhorse is 27% shorted. Alright, we might have something there. Data doesn't update till tomorrow on the cost to borrow, sadly. But utilization 98%. Might get something out of that. Double bottom. You're not going to get your $12 on this piece of junk, by the way. But you got your kind of inverse head and shoulders. You might have something there. You might get a little bit of your money back. So primarily going to be covering squeezes tonight, John. If we have some time after, which we might, I will do some requests. Absolutely, we can do that tonight for sure. So was hoping to get some live or text data for you guys tonight, but because I think they have a glitch in their system where they reset on a Monday, so like this is Workhorse's data, and you can see it tells you the current short interest, but the cost to borrow, because market's not open today, they can't properly access it, and they don't have it coded into their system to account for days off, so this will get updated tomorrow, so that will be a little bit sticky. But I do have data from Friday on some of the stocks I wanted to cover, so that will be good. So we'll go through those, but unfortunately, like, I can give you the current short interest. Cost to borrow will be a little hard for requests tonight. I have Arch as well. I have a rather large amount of Arch, which we will cover tonight because Arch is one of my top squeezes. I'm currently holding 3 stocks in the squeeze category, and believe it or not, it is the first time And since last year, February, March, around this time, that I have purchased AMC and GME. So I believe finally that they may be ready to go again. I have never been a big proponent since the first squeeze, but I have waited and lurked and waited and let them come to the point where the data made sense. I think we were at that point, and that's why I started tweeting about it. I wrote about it in the newsletter. There's certain events happening in the market, as well as everything lining up that tells me we got a good shot for a squeeze. Doesn't mean we're going to get one. Shorts always come out fighting. So I actually think GME and AMC have a good shot. And AMC had some really good data. We can actually see... I believe it's AH9. Yes, so this is Germany, and we can see what AH9 looks over there. I can't remember. I think it's FWB. All right, so nope, it's the other one. It's this one. There we go. So this won't open for another 3 hours, but this was today. So this was from last night to the morning. So this opens up at 1 Eastern. You can see the GME over in Germany, their market was open today because they don't celebrate our holidays. But you got $12 up to $14. So this gapped up $2 overnight in Germany. That's a really good sign for the American Open tomorrow. I do have... what would you call a price of a new car is worth of AMC right now. So I am a very big believer in the movement. And I haven't been. If you know me, I have ripped AMC for the last year, but the data is finally there. So now I'm on board. So when the data's there and everything makes sense, that's when I make smart investments. I just don't chase things because everyone on Wall Street Bets tells me to diamond hand and ape into shit, which I am not about. I'm about making smart investments, calculated investments, and calculating your win versus loss ratio. So I hold very deep in the money long-term options on AMC, which I will have a tight stop loss on, but this is a play that I'm not going to miss if this thing goes, because this thing can go easily to 20. So let's go to regular AMC. We can cover this right away as it's a hot topic with I believe there's a $2 to $4 difference. I got to look again what the exact ratio is on American AMC versus German, but according to this, it would be about a 2.5. Well, maybe a little bit different, but should be similar gap up tomorrow. We should get something around $16, hopefully. But Zenon, what's your cost average on AMC? You one of those $40 holders? So, if you know me, since AMC was $44, I told you it was going to go back down to $10. I said somewhere between $10 and $20 it's going to consolidate. Last time we got a nice squeeze from $12 up to $34. I think, now, I don't know if it's going to squeeze again up to $30, but I do think $21 is very possible. So keep that in mind. I think I'm going to be reasonable with this. I will take the $21, but that makes the most sense to me. That puts it in line with the original squeeze as well as the latest pivots here, and that's where it's always rejected recently until it pushed through here. If nothing else, you're going to see some consolidation between 18 and 21 in that range. So you're above $40. That scares me. So let's show you some data on this. I don't know. I don't have the recent cost of borrow, but I believe it was around 60%. So if you guys are unfamiliar with cost of borrow, I'll get into that. But let me put it this way. So I'm going to show you this data. Like I said, Ortex's data is a little lacking today because we have a day off. But let's go through what they can show us. So the big thing you got to look here is, let me put this up here. We'll dive into this data here. 23% short interest. But here's the thing: 118 million shares shorted. Utilization 100% according to Ortex's data, which means there's no more shares to short. So even if it falls tomorrow, let's say to 13, my stop loss is going to be under $10, $10.50, because even at that point, I still think there's a good chance. Now, you did get a higher low. If we break above this 1450 level, that's what I'm looking for. 1450 to 15 bucks in this level. Over that, then we know we got ourselves a squeeze. Over 15 is probably the safe zone, and then you can see that nice run from 15 to 2021 area. And we get over that, I doubt it's going to break this downtrend. You also have another inner downtrend right here that was going to be tough. That's why I'm thinking you get like that 2021. Oh shit, we got naked girls in here. Look at that. It's probably because I put GME. Probably because I put GME in the title. You get these bots that join. There we go. They're moderated. How come I can moderate that faster than my moderators? Come on, Randy. I'm gonna have to make Xenon a moderator. Let's do it. Let's make Xenon a moderator. See how good he moderates. Need your power, Xenon. Xenon. How's everyone doing tonight? You having a good time? Did you have a good weekend? A 3-day weekend if you're in the States? Hopefully you enjoyed the day off. It was a chance to do some learning. So, again, here's what I'm looking for. Let's zoom in here. You can see we have a very strong impulse. This could be a wave 1-2 here of an impulse, or this could be a wave 1-2. If this is a 1-2, then you're looking potentially this to hit, you know, $17 to $20 on this wave 3, and then you see a consolidation, then maybe a $22 on a wave 5 after a wave 4, potentially maybe even get that $30 again. Now, it's never broken this downtrend since the original squeeze. This was the first one that it did, and it came all the way back down, so we'll have to see how that one goes. But I'm very excited for AMC. GME actually has the better of the two short data, so let me show you that. I'm going to go into what makes a good squeeze, and I'm going to talk about quantitative tightening, which I'm sure you guys don't know much about, so I'll go into that as well. So again, both of these are looking very juicy. So this is GME's. You can see right there GME's numbers. So this is why I like GME, but one thing I like about AMC is this number is different. So the thing about GME compared to AMC is AMC's float in terms of how many shares are available to trade is way higher than GME. GME's float is much lower. That's why you saw a much more explosive squeeze originally on the original squeezes, because it's a much smaller market cap and much smaller volume. So here you have 17 million volume. You see above average volume on Friday, average volume 5 million. So that means this could squeeze for 3 to 4 days, right? Almost the entire week. We do have earnings this week as well, June 1st. So that's going to be Wednesday, I believe, after hours. So you could see a nice run up tomorrow and June 1st. And June 1st also has another data point that is interesting. So last squeeze, you saw AMC or GME go from 78 to 199, almost 3x. This time it's bounced at the exact same point, 79 to 107. Got your nice little retrace, and now you're making a nice flag here. Yeah. Who kicked the girls out? Should I bring him back, Chris? So hold on, I gotta share this chart with Jonte. He always gets excited about GME. So GME is gonna have a tougher chance this week because the earnings are going to come into play and they are not going to be good. So I will not, most likely, I'm not going to say it's impossible, but I do plan on opening a small position with GME tomorrow. I currently don't have any. I much rather prefer AMC this week over GME, but I have a feeling GME's earnings are going to be terrible, and I don't think it's going to be good. I know last time it squeezed off of earnings, even though they had bad earnings. The time before that, and the time before that, and the time before that, and the time before that, it did not squeeze. So we'll see. So I will be holding AMC at least through Wednesday. I do plan on buying GameStop at some point tomorrow to play the run-up. I think the chatter is large on GameStop right now, and I do think it has potential for a nice earnings run-up, especially after what it did last time. I think this run after last earnings is going to be what does it. So So, again, both of them have good short data. I like AMC's better. I think what you guys are really going to like are going to be some of the things I'm going to show you right now. So, while these squeezes are the traditional everybody knows about, I think what you come in here for is alpha. I'm about to give you a fuck ton of alpha. I mean, a bleep ton of alpha. So, I shared this with our private group. I'm going to share it for you guys for free. Some of you here are obviously from our Discord, so let me show you. I want to go over it for you and talk about it with you. Let's go here. So one of the ones we've been playing for the last couple weeks has been Redbox. Redbox is probably the most explosive of all the stocks that we've been covering. This one has potential to really do dummy things. So the story behind Redbox, and let me go through what I'm about to share with you. So I'm gonna share this data, and we're gonna talk about the data, and then we're gonna go through what that means. So for those of you unfamiliar, this one has a whole bunch of things going on. So this is live screenshot that I took on the weekend when the data was still live on Ortex. So this was Friday. This was Friday night that I took this after market close. So a couple things going on with this. It's on the threshold list. 157% of the free float is shorted. Cost to borrow, insane. And so I'm going to go through what all of these mean so you guys understand what we're talking about, and then we're going to deep dive into all of the stocks that I'm looking at right now that have insane data like this. So I'm a very data-driven person. I'm a very analytical person. You know, I design algos and trading algorithms, so I have to look at the data, and that's what I understand, and that's why I like trading, and that's how I know I got myself a good opportunity for a squeeze potential here. So let's go through it one by one. What does the threshold list mean? That means it dropped over, I believe, 10% in a day, and let me just make sure I have that number right. Basically, all right, so a lot of times what happens is a stock will drop significantly, and those transactions do not clear in accordance with regulations set up by the SEC, so it gets set on a threshold list. And in terms of Ortex, what this is a threshold list is generally a short restriction list, which means that it cannot be shorted on downtrends. You can only short when the stock is in an uptrend. And the thing with this is Redbox is already 100% utilization rate, so that combined with the threshold list means we have only potential for it to most likely go up. So threshold list is very good. We love seeing this on heavily shorted stocks. And then the other data is just wonky. So this is one of my number one shorts right now to play for a squeeze. Hold on one second. So Redbox should be absolutely on your watch list for this week. I'm going to share at the end of it what quantitative tightening could do for shorts as well. So you got a couple things going on. You have this making higher highs. So basically it gaps up over every night and then basically consolidates every day. But it's still doing the stair steps, right? So you got 1, 2, 3, 4. What we're looking for is that breakout over $10. Over $10, this thing could absolutely go wonky. And the fact that it's 160% of the free float shorted, but the free float gets, you know, you got to look at the average volume lately. Average volume is 30 million a day. So what you're seeing right now is people like me and other people seeing this and thinking it's going to get squeezed. So they're playing it more than the shorts are playing it, and the shorts are just biding them time. But the shorts are getting charged almost 900% interest every single day. Now, the interest is obviously spread out over the year, but you still think, you know, 900% interest, that's 3% a day almost that they're getting charged just for holding the stock. Eventually, those margins are going to get claimed, and they're going to have a margin call, and they'll have to cover those shares. So while I like all the data here, particularly the threshold, particularly this is also 100% utilization. Utilization is how many of available shares available to short are utilized. 100% means all shares that are available to short are utilized. So this is where the exciting part comes in. So keep this one on your list. I have another fan favorite, BBAI. This is definitely on my list right now. A lot of people thought this was going to squeeze lately, and it did the opposite. So let's clear here. Let's go in. Let's talk about this. So this is at that point where it's getting to all-time lows, and every time it's hit this level, it's bounced really hard. And you can see last time it hit $5, you know, it ran all the way up. So this one definitely could have some legs. So you're looking at this here. This could be the point where I'm looking to see it, and this is what I'm looking at too. So here's the data on BBAI. Now the actual short percentage is not that great, but in terms of short shares shorted compared to average volume, And the float, it's not bad. 16% is still easily playable. The fact that it's 100% utilized is great, but what I'm really looking at here is cost to borrow. When you see cost to borrow spike like this, and shorts are getting charged interest daily at 2 to 3%, that's when they start to weigh the negatives versus positives. How much more can it really go down? It's at major support. If I was a short, I'd be happy covering right here, especially if I shorted it at like $10. I doubled my money, right? And that's where I'm looking at in the mind of a short. If I'm a short, does it make sense? What is the advantage of continuing to hold this past $5 other than them potentially going out of business and it's going to zero? But if I'm getting charged 2-3% daily, even if it goes to zero, I may not make any more money. So this one's very interesting in that regard. As long as the cost of borrow remains high, I think this is a very good candidate. At least for a pump to $6, I think you could see a nice little squeeze on Monday or on Tuesday to $6. Potentially even if we get a nice squeeze up to $10. So keep that one on your list. Another one I'm looking at. What I was looking at this weekend is I pulled a cost to borrow report and I looked at the top ones. I didn't really look at the charts as much. I'm interested in the charts, but these are all ones that have potential. This one in particular I'm about to show you has some also very insane data, and already has started to squeeze. So you could see this one is a very good candidate. Hi Warren. This is a very good candidate tomorrow for a squeeze as well. So this is interesting because it already went from 75 cents to 3.39. A crazy return even if you're just playing shares on this, but I think this has potential to continue to go. Still 30% shorted, still 2.4 million shares. You could see we had a low volume Friday and it was basically even for the day, down 6 cents. So this thing over 230 you could really see get going. So keep an eye on this over 230. You want to see this clear recent highs here, break this downtrend and go. So I believe this was basically a level. If you did a retracement here, yeah, you're basically looking at a halfway back retracement down to the 6.5. This is typical for a wave 2. Afternoon cast. DK, can you be a little... Can you be a little bit more specific with your question? What do you mean by plus VE? But regardless, pay attention to this one tomorrow. This is one that I've seen in the past resurface. SST, System 1. You can see this was something I've covered in the past as well. It had a really nice squeeze up to 37. This isn't going to do that, but they have made money recently, so it is net positive. So are you talking about the estimated Ortex estimated shares plus 2.74? I don't, this is 21.38%. The higher percent, the more people are shorting it. The lower percent, the lower people are shorting it. Unless you're looking at the estimated short change. Yeah, that means, oh, I see what you're saying, the short interest change. That means people have shorted it more, which means more people have shorted it, so higher potential for a bigger squeeze. So yeah, Adderall, I do actually have a short squeeze list right here. I could absolutely share this with everyone, so need to add these new ones to it though. Yeah, I'll share this list with everyone. This is a good list to watch. So all these are heavily shorted stocks, but not necessarily like the data I'm showing you right here. Yeah, so this is just like how much is changed today. So did more people short it? Did less people short it? Don't pay attention to this. Pay attention to this, this, and this. Pay attention to the bottom row. Top row don't matter. Here's the list right here, Adderall. I can paste it right here for you. Post it right here. There you go. So SST, you can see here, just broke a recent downtrend. Is consolidating below this pivot right here at 1036. So for me, my mark's going to be over 1050, and I'm ready to go on this sucker. Maybe be safe 1085, but this thing could see a run to 15 potentially if it gets going. So let's go on to the next one. Indo. Energy company. I always love energy companies right now with everything going on in the market, which is why I'm going to talk about Arch as well. So Indo is a original squeeze. Now the big thing that you got to know about squeezes is the original squeeze, the secondary squeezes are always usually smaller. It's rare that you see a large squeeze like this and then you get a larger squeeze. So that's why I always say be very quick to take profits on secondary squeezes, which we're looking at right now is a market-wide secondary squeeze with people looking to lower their margin requirements. You're going to see some short covering, you're going to see short-term bottoms, and so on and so forth. So you do have earnings on this same time as GME, so that could provide a nice squeeze opportunity for this. 1 second. So, you know, this is Indonesia Energy Company, oil company. Might be a good earnings play this week, believe it or not. So, June 1st earnings. Looks like they just had earnings March 2nd. Alright, this can't be right. So, it looks like they just had earnings March 2nd. Is that right? No, actually, that makes sense. Okay, so yeah, June 1st. Makes sense. I was reading that wrong. I was like, wasn't it just March? No, it's June already. Look at that. F me. Yeah, BGFV is on this list. The data on it is okay right now. It's not really a catalyst for it like these other ones that I'm looking at. ChargePoint is not on this list. So alright, so for me, just look for a recent pivot on this for the breakout. I would say that would probably put this over, you know, over 17. You're looking good here. If you really want to be safe, you could go 1850. But you have earnings this week. It's an oil company. If oil up this weekend, so oil's going to be up. I like it. I might play this one myself, so... Alright, let's go to an old fan favorite, Ater. Ater is interesting. Not my favorite right now, but an oldie but a goodie. So, I don't love that it's bear flagging right now. I think that's my biggest worry is you're getting this nice bear flag at the bottom here. I think the data is good. I just don't love the bear flag. So in terms of chart, I hate it. Now, if it can clear recent highs of 355. You know, maybe we get another run to 392, and then you start getting your ascending triangle here, and then you got yourself potentially something. But in terms of other stuff, you know, they don't make money. It's not a great company. This would only be if you see the cost to borrow spike even more. So keep it on the list. Watch it. Not my favorite right now, but I wanted to bring it up because the data is there to watch it with the cost to borrow and the short interest being high. One that I am watching. So another one that I'm watching is, this one was interesting, Medavail Holdings, because of the recent price action. Not super shorted, but enough to make it run. So the thing that caught my attention here is shorts are covering right now. So it means they are getting a little scared with this. And then you're also seeing the cost to borrow maintain on high average, but the actual amount of shares shorted and everything is not fantastic for a huge explosion. But, you know, in terms of, like, if you were to play shares on this, you could see it run from 172 to $2, and that's, you know, that's a 25% move in shares. That's very reasonable to think that it could do. So in my opinion, the risk reward, the risk is low. You know, you put like a 148 stop loss recent low, maybe it wicks down to 135. So you got a 1-to-1 risk ratio on this one, which I love. 1-to-1 risk ratios. Very interesting to watch. All right, now one that I wanted to show you guys. This is an oldie favorite, Dutch Bros. I think this has already started to squeeze. I don't think they get enough. You know, they just hit the most recent pivot here and rejected. So keep an eye on that. But what we're looking for here is this break of recent highs, right? So we want to get over this squeeze here of 41. This is a good company too. Very shorted. Look at this, 27%. Cost to borrow has been high, but some brokerages aren't really charging interest on it. I hate seeing the minimum down here because I usually try to go off the minimum. I want to see what this looks like tomorrow. If this spikes up, this is also on the threshold list, so I want to see what this looks like tomorrow. You know, you saw this drop from 40 down to 36, so I really like to watch this one. This one is something that could get some traction with Twitter and Wall Street Bets too. I'm just wondering if they're going to be distracted by GME and AMC, but I do like this one over 41, even over, you could start an opening position over like 38.50. So really good data on that, really watching that. Excited for that. So let's look at some of my favorites that I'm in right now. So one of the ones that I've been in for a while, I'm holding good sized positions in both of these. So Camping World Holdings, I really like. You can see this falling wedge breakout and then these rally-based rallies. So the data on this is really good. This one I like for a multiple reasons. So I don't have what the cost to borrow was, but I believe it's around 30% as of Friday. This is the data I just pulled off of Ortex right now. 44% shorted, so really good fuel. This would take 12 days to cover. You can see 700,000 shares covered on Friday. This is one that I really think, with the right push behind it, probably going to need to do some campaigns to get people to talk about it, whether that's Reddit, FinTwit, StockTwit, whatever. People need to be aware of this one, because this one could do what GME did back in the day, and I'm really excited for it because of that. And it's not just the short data; it's a good company. So let's go into the financials on this one. This is why I also really like it. Is this one I can financially get behind and actually invest in? there's a lot of things that are really good about this. So 2.2 billion market cap, you know, it's kind of a mid-tier stock. It's not a small stock, it's not a Jartlight, it's not a mega cap, but it's a mid-tier cap. They make money. They make good money. They make a lot of money. You know, they have a really good dividend, 9% dividend, 4.8% price to earnings ratio. You know, the average stock is around 20, so about a 75% discount there. Income statement has been rising every single year. Look at this way. They made $7 billion last year. Well, they brought in $7 billion. They profited 278. So their profit margins are a little lower, sure, but $7 billion they brought in revenue, $2 billion company. Something's off a little there. Now they do have a lot of debt, which is probably what shorts are betting against right now. You can see here 4.4 billion in assets, 4.2 billion in liabilities. So their debt to assets is not so great, but they do have good. They do have a good book value of 3. Now, I when I invest, I like to see that book value between 1 and 5. Now, that's been maintained over and over and over. It is rising a little recently, which is fine, but you got to look at something like, you know, growth stocks book values between 10 and 20 are literally labeled as investable. So for me, something that's a tenth of that is good. So you can see free cash flow, not fantastic. Again, there's always a reason stocks are shorted, but as long as they are making money, that's something to consider. So their quick ratios are good. Their current ratios could be improved. So their quick ratio means they can meet all of their short-term debt. What the shorts are betting on is their long-term debt is a little bit not so great in terms of their ratio. So literally you want to see these under 1, but it's manageable right now, and that's what we want to see. And then they always can raise money, but we don't want to do that. We don't want dilution. So as long as, you know, they pay their dividend out coming up on the 13th. So this is one that we'll be curious to see how it runs into the dividend. You know, typically you see sell-offs recently into the dividend, and then yeah, you can see the dividend and shortly after. It all depends, right? So for me, the data, the risk reward is there, where I have a long-term position in this. I think the price to what it has been is the upside is too great, and the price to own it, even on options, is super cheap right now. You can get a couple months out, 30 calls, super cheap, under $1. I think the risk reward is there. I'm in on this one. So Arch. There's another one that I've been playing recently. You see me tweeting about it a bunch. It had a really nice run last week. We caught that, and then it paid the dividend out, which is fine. And then you saw that take out a bunch of stop losses, so it sell off, and you saw a nice rebound, and it held the uptrend, which is what we want to see. See, it had a nice hold there, didn't even test the stop loss. So I expect this one to easily fill this gap this week, and if not, break out and hit all-time highs. There's no reason why this shouldn't have just absolutely bonker earnings. Like, the earnings it's going to have are going to be so ridiculous that this thing should go to 300 in my opinion. And the options flow correlates that. So right now it has a PE ratio of 5, very similar to the other one I just showed you. But coal, this is a coal mining company. Coal prices have been absolutely ridiculous. Let me see if I can see what the current coal prices are real quick for you guys. Alright, China coal is up. Coal prices, like, in terms of like futures and prices and everything, like coal is the one that I have found the hardest to follow. Alright, here we go. Ice coal has up $1.36 right now at 141 a pound. Really like that. That's not live today though, so it'll probably go live tomorrow. But you got crude oil and gasoline and Brent oil up. So usually when those go up, coal goes up too. So I expect this to be a good play tomorrow. And then if you want to know the short data, let me pull that up for you guys, the latest short data on that. This is still looking pretty. I don't know why someone's shorting this when they just keep making more and more money. I wouldn't want to be caught short on this. They're going to get the squeeze of a lifetime. And whatever fund is short this is going to get annihilated on their short the longer they hold this. Because I'm starting to see the cost to borrow rise on this every week. I believe last week it was around 15 to 20%. So nothing like crazy, but the more people talk about it, I really like energy squeezes right now because energy prices just keep going through the roof. And that is a recipe for success when it comes to short squeezes. Because why does someone short a stock? Because they think it's going to go down, because they think they're going to lose money and go out of business, or some sort of event's going to happen where they think the stock is overvalued and it's going to bring it down. Now, the only thing that's going to do that is some sort of Ukraine-Russia peace agreement. And as long as that war keeps going, the shorts are going to keep getting squeezed on energy. Because if Germany, this is a Germany play, by the way, Arch in particular, in my opinion. As long as Germany isn't depending on Russia and for oil and natural gas, guess what? They have to run coal plants and nuclear plants. And coal plants in particular are what we are looking at running extra time right now. You're seeing a coal squeeze because people are cutting off Russia oil and natural gas, and at the same time you're seeing disruptions in Ukrainian oil and natural gas, which isn't as developed as Russia obviously, but in the future most likely will be. And we'll definitely see an oil and natural gas collapse in the future, not right now, probably a year or two from now. You're going to see those prices just collapse as production skyrockets again. But in the meantime, these energy companies are making money hand over fist. At the same time, we should be doing the same, playing them. So let me pull up. Right here you have 25.75%, 4.5% million shares. Sure, you can see the average is 800,000, which means you're going to have at least 5 to 7 days of covering if this thing were to start getting exploded. So the thing is this is not a very well known stock, so you're just going to have natural squeezing of it. You can see what happened last earnings, right? You got shorted into earnings. People thought the earnings were going to be bad. Turns out they were amazing. It went from 125 all the way to 185 in about a month. And really in about a week, you can see from, let's see, it went from 130 the day before earnings to 175 in 2 days. It went up $40 in 2 days. And it's done this before multiple times. So when it squeezes hard, it squeezes fast. And look at what they're expecting. They're expecting the earnings to double quarter over quarter, which would basically put it at a 1 to 2 PE ratio and just give them an insane amount of money. So keep this one on your list. What I don't love is the utilization on this going down. I want to see that go up, but this needs to be on your list. Alright, that's all I got that I wanted to cover. I believe you guys wanted me to look at some stuff. So, the yellow line, yes, merge. The yellow line is the 200-day SMA. So you can see here, that's the 200-day right here. I turn off a lot of my indicators for live because they crowd the screen and I want to make things simple for you guys. But this one I keep on because I think it's interesting to see if something's above or below the 200-day moving average. I mean, going from $1 to $1.80 is also interesting. Yeah, it went up, what, from 230 to 258? Or are you talking like when it went from like 257 to 350? I haven't even looked at BBIG. I have it charted, obviously, from back for the original squeeze. But let me look at the data on that. Okay, it's on the threshold list. 14% shorted, 100% utilization, 31 million shares shorted. Definitely has fuel, but all these catalysts that people keep talking about with it, I remember they're like, oh, they're going to merge with a crypto company. They're going to do this. They're going to do that. They had $2 million in revenue and lost $550 million. How do you lose negative 24,000%? Oh, man. Yeah, look at this. All their money comes from financing. Every single time, all their money comes from doing share offerings. I would never invest in this stock. It is a piece of garbage. I'm not spending any more time on it. Arch does not have earnings this week, so don't worry about that. It's July 27th, so don't worry about Arch. Oh, yeah, sorry, Chris. I talked about quantitative easing or quantitative tightening, and I didn't talk about what that means. So, I've been reading about this theory lately. I'm not sure if it's going to play out, but if enough people believe it, it might actually just come true because enough people believe it, then we might actually get some movement. So, quantitative tightening means that the Fed's going to tighten down on funds for reverse repo action. So what reverse repo is it allows funds to, I believe, borrow against their assets. This is something that's still new to me that I've been reading about. I'm trying to understand it more, but even for me, it is still confusing. So basically, a reverse repo is a short-term agreement to purchase securities in order to sell them back at a slightly higher price. Repos and reverse repos are used for short-term borrowing and lending, offering more liquidity to central banks and hedge funds in order to add money to their money supply via the market. So basically allows companies to show more cash on hand in order to cover maintenance and margin fees. This is the theory behind it. So basically companies are allowed to sell their security and their underlying assets in order to buy them back at a slightly higher price. So what they're showing is more cash on hand, which allows them to basically remain in compliance with their margin requirements. So allows them to short stocks a lot more because they have a lot more funds, and then they can maintain margin maintenance. So what's going to happen is June 1st, the Fed's going to start tightening the quantitative money that they allow. So for repos and things like that, they're going to have less money available that people can get. So basically, all this money that they're showing right now is going to tighten. So they're going to start reducing their shorts in order to cover their margin maintenance on those positions. That's the theory that I've been reading about. Again, I'm only putting 2 grains into it, but the fact that people are talking about it means that we might get a little movement behind it. And if it does turn out to be true, we get the social media chatter plus the actual data behind it being correct, which is almost never correct, right? If we're going to be honest. But let's pretend it's going to be correct. So basically, less money available for banks and institutions to borrow means that they can't cover their margin like they used to be able to, which means they might get margin calls, which means they might have to cover their short positions. So, long story short, starting June 1st, you might see some shorts being covered in order to take a little bit of risk off the books, if that makes sense, long story short. Does that make sense? The need for speed. Alright, I know SIGA has been getting a lot of notice lately. SIGA is not shorted. Well, it might be shorted now, but it wasn't shorted. SIGA is literally a monkeypox play. So people are playing this because of monkeypox. What's up, Lit? So what you're looking at is... Let me look and see if it got short. People shorting it now. I imagine this is going to get shorted. I don't see how it doesn't. Yeah, it's literally 3% shorted. There's literally no short interest in it. This is not a short play, but I know people have been talking about it because it is a social media play with people wanting to pick a stock. This is the stock to play for the monkeypox. So the more you talk about monkeypox, the more you're going to see SIGA go up. This is kind of like... when Myrna and you see remember when we started getting the vaccine talk and you saw all the vaccines stocks get squeezed, NVAX, Myrna. This is the similar thing where those stocks weren't shorted. They're literally just getting bought because people want to play something related to monkeypox, right? So it's the flavor of the week is what I call it. I really want to play Asan on Thursday, but I have a feeling they're not going to make that much money. I love that the CEO keeps buying, but the CEO keeps losing a fuck ton of money on it. Like they need to make money, and they're about to have their worst quarter ever. We actually use Asana at TFC. We really like it. Really good software. I really like their software. But they need to figure out a way to make more money because they offer their product basically for free. So it's like they need to figure out a way to incentivize people to pay for Pro, because in general you don't need it. We pay for it because we like the features of it, but in general they don't make money because they don't incentivize people to use their product and pay for it. And that is long story short, and that's probably why. I still don't know why it ran to 144, but that just had to do with the market-wise just melt up. Let's see. I don't know if Asan is shorted either. It would make sense if it did. I've never seen it pop up on my scans, though. Okay. 25% shorted. Not bad. Got some data there. I think someone at the beginning... John, you still here? John, if you're still here, I will cover Goldman Sachs. Well, long story short, AMC is one of my favorites right now. It's the thing. It's my actually, as of today, AMC is my largest holding, which is funny. So, I have, of all the stocks, AMC is the one stock I have the most money in. And it's not a small amount. So hopefully it goes. If it doesn't, I have a tight stop loss. No big deal. What am I sipping on? I am sipping on my favorite vodka, Deep Eddy, with a vegetable puree of passion fruit, pineapple, and grape. It's a Tropicana Island Punch. So something fruity tonight. I feel like I was on that vacation island mode. I wanted something fruity. So I actually owned a couple thousand shares of Redbox last week. I did have a trailing stop on those that got... So I had a trailing stop that got hit on the sell-off right here. I always... right, Chris? It's a weird world we live in. So... I am looking to potentially re-enter Redbox. Well, I gotta go help my wife get the kids to bed. I'll be active in the Discord tonight, and you can continue to ask me questions, but I do have to get off right now, unfortunately. Thank you guys for hanging out with me on this Monday night. Hopefully we all make some money on some squeezes this week. If I will promise this, I will go live every night this week if we get some squeeze action, because we need to cover this if we start getting some squeezes, because we can make a fuck ton of money if we start getting actual squeezes. Not just like the small movement shit, but like when we start getting $10-$20 moves after markets, that's when we know we're in squeeze season, and I think it's coming, and I think it starts this week. So good night, everyone. Thank you for joining me, and hopefully you'll be joining me more this week, because we're going to get the squeeze season started and we're going to get some excitement behind squeezes again. But let's see what we get and let's go from there. Oh, the Naked HD girl's back. All I ask for you, spread the word. Let everyone know squeeze season's back, because the more people... Squeezes is something that's not a singular focus. It takes everyone to talk about it, because when everyone's talking about it, that's when you get the action, like we did with GME a year ago and AMC a year ago. And I'm seeing the chatter. I'm seeing it start. Let's get ahead of it and let's get that push. So thank you guys. Peace out.